G'day everyone, welcome to Breakout Wednesday. It is July the 10th, 2019. It's about 9:40 Perth time and 11:40 Sydney time. So the All Lords are in an uptrend still. It's had a tiny little pullback this week, but nothing serious. And the trend's very much up, so I try not to analyze the indexes too much other than just looking at the basic trend. Just try and concentrate on stocks and the best setups out there, and just trying to take good trades, and that's all I try and worry about. So moving on, in week one I discussed short-term strategies, so how I look for tight bases and I look for them to be breaking up, and I get long aggressively, and I have a really tight stop loss, and I'm really looking for a move that's going to take, say, 1 week or a couple of weeks or a couple of days even, and I'm trying to ride that explosive breakout and momentum move. It's not a long-term investing strategy or anything like that. It's more of a shorter-term thing. So today I'm going to talk about following major trends and literally position trading and trend trading. And so this happens in a different account that's very separate from that short-term account, because I like to differentiate the two because they are very different things. And I'm going to explain and just go through how I use Darvas boxes to try and find these major trends. And so I do implement some basic fundamental stuff. I'm looking at, there's a theory out there, it's a CANSLIM formula where you're looking for growth stocks with huge increase in earnings and sales, and you're looking for new companies which are doing new things. And so if you guys do some research on CANSLIM, there's a great book written by William O'Neill called How to Make Money in Stocks that goes through CANSLIM investing. And so a lot of the stocks I'm buying from Darvas Box Breaks and trying to ride the trends are CANSLIM stocks that I think are high growth. But today I'm just going to go through just some Darvas scans which I've done, which have just found, and just an example of how it works and how you use it and how you follow the trends using it. All right. So first of all, I just did a basic 50-day Darvas scan with everything unticked just to find stocks. And so I'm obviously going to handpick some stocks here, but there are just so many stocks in this list that have found good Darvas boxes. I'm not just handpicking a few winners. There's hundreds of winners in there. You just need to go through it and check them out yourself. So Newcrest Mining is in its seventh box, and look, it's a pretty set and forget investment strategy, right? So if you're super busy, you've got kids, you've got family, whatever, and you have no time to sit, for hours and hours in front of screens, trying to trade in a very short term. This provides you a way to try and really do well by and still keeping your busy life in check, right, in order. So the theory here is that a box forms, and if you decide you like this company, you like its story, you like its growth, all that sort of stuff, then you put a buy order to buy the top of this box, right? And then you put a stop loss at the bottom here, and there's a 2% rule here. So the top of the box forms here, and then at the bottom of the box forms here, and then the default setting on Protrader is it adds in a little 2% buffer. The reason it does that, I'm just going to quickly run through that because it's interesting. The powers that be in the market know where stop losses are commonly placed, and there's a thing called stop running where they will just hunt those stops. And so, let's say this is a little swing low here, it comes down, forms this low, and then it just, it's fascinating how often it happens. So it comes down here, takes out the stop losses and runs back up. Back here, there's another tiny swing low here, comes down, takes a stop here, takes it again here, takes it again here, and runs up. And I'll show you how this happens time and time again on different Darvas box scans, but it happened again back here, by the way. And so that's why there's a 2% risk buffer here, to try and stay away from all the fun and games that's happening intraday, and all the whipping and stuff. You're trying to stay far enough away from that so that you give yourself a chance to ride the trend. And so with NCM, it's broke out. Obviously it didn't start well. You have your stop down here, and it came back out, and then it's still going up, and it's sitting in a box currently. All right, so now I'm just going to move on. Okay, IEL is an education company that's sitting in its 8th box, I think, and obviously this first box would have been hard to catch because it just gapped away, but then it formed another box and another box and another box and another box, and it hasn't really zoomed up, but you're still up a fair percent, and maybe it just hasn't even started going yet. Maybe it's got a lot more in it, who knows. So certainly an easy way to trade, right? You're just sitting back, you're letting it do its thing, you're accepting that this is your risk, and you're calculating your position size based on that. And the thing is, trading, obviously, it's not about how often you win. It's about how much you win when you're right and how much you lose when you're wrong. And it's about probabilities and taking good trades and just accepting, the good investors and traders just accept that they're going to be wrong 40% of the time, roughly, and they're just expecting those losses. It doesn't come as a shock. They just take them. But the point of saying all that is that if you're going to take this risk here and buy at $15.11 and have your stop down here at $13.72, you need the upside here. You need to be patient enough to sit with this and give this a chance to get to $20, $25, $30, because then your potential reward way outweighs the risk you took. And also, obviously, your risk goes down as you trail your stop loss up, but it might take a while to get well above break even in a stock like this. And the faster moving ones that might not take long at all. So let's have a look at a fast moving one. Max 7 Technologies, it formed a box back here in April, broke out, formed another box, broke out, formed another box, broke out. So obviously, for something that goes this well, you need a strategy and a rule for selling some of this. And let's say you want to sell half of it. If it breaks out aggressively like this and you sell half of it and then it forms another box, you might buy that half back, or you might buy only a little bit of that, half of that half back, say a quarter back. It depends on you, but then it breaks out again aggressively and you might sell half of your whole position again and keep the other half, or you might sell all of it. It just depends on what strategy sits well with you. But the fact is, maybe this company's going heaps higher, and so sometimes it's nice if you believe in the fundamentals and you believe in the story to keep a little bit on the table, but it just depends on personality and what makes you feel comfortable. So moving on, insurance company has only just left its second box, gapped up, massive volume, held that gap, formed a tight box, broke up. And this is a good example. And so you've already got your stop loss to well above break even here, and you're just letting the trend do its thing. This might come down here and stop you out. You've still made a profit, but the fact is, with this major trend following stuff, you're really just getting on with your life. You're going to your full-time job. You're doing whatever you do, and you're just letting the trends play out. And that's how if you want to try and rise something from $6 to $20 or $30 or $40, then that's the way to do it. You can't analyze this every day, intraday, and have your phone out staring at it, looking at the intraday updates, because you're just going to go absolutely crazy. So this is just more of a sit and forget system, and it allows you to get on with your life, all right? So NST is a gold stock that I'm watching at the moment. It formed one box, broke out, it's in its another box at the moment, which is tightened. And so if we look at gold had a big run, it's consolidated and going sideways. Who knows if it's going to break up or down, but if it consolidates and goes up, gold, even if it stays at its current level, it's pretty high price for gold, and the gold stocks might continue to storm higher. And so there's certainly quite a lot of gold stocks sitting in boxes at the moment. I'm just going to mention this one now. I might mention a few later if we have more time, all right? So just moving on to another super cheapy pain check. I think Frank's talked about this one a bit. It formed a box back here, another box broke out, and obviously you need a rule to sell a bit of this because it's just a cheap little thing that could crash any time. But it just shows that this happens in expensive stocks, cheap stocks. I like to see all these moving averages in sync. By the way, I've added a 10-day in just for a moment. I like doing it sometimes. I'll probably take that away later, but that's what this orange line is. It's the 10-day moving average. And so it happens in expensive stocks and cheap stocks. I think there might even be one here. I wasn't going to talk about this guy, but I may as well. So Commonwealth Bank, if there's a lot of people out there that for their super funds or whatnot will only trade the top ASX top 100 or whatever. And so this is a legit Darvas box setup. Obviously it's chopping around, and you would have shown a loss here, and you would have shown it has a lot of false breakouts, but this isn't an explosive momentum type stock. This is just a big bank that will chop around and do its thing. And so if you believe that the Commonwealth Bank has a future and you like the company, then obviously buying a break of that, having a wider stop loss, and just trying to sit with this for as long as possible, because once trends develop, they can last for years. You have a look at some of the stocks on the ASX, but Nasdaq, and have a look at even Afterpay, and have a look at Amazon and Apple and Facebook and Netflix, and have a look at how long their trends have lasted. And it's just mind-boggling how long a trend can last once it gets in place. And what you need is a system where you won't whip you out intraday or intra-week even. And this does provide that system, because this 2% little buffer here really does keep you in a lot of these big moves. You just need to be willing to sit through some pullbacks, all right? So moving on, there is one really good example, which I think it's in its like eighth or ninth or something box, Transurban Group. So it's been going up. It's formed its first box here, just popping above all its moving averages, and it's been going up ever since. And you just happily trail your stop loss along, and you'd be sitting on a nice profit now. So this, I can find so many examples like this at the moment, and it's not just one or two. I could literally sit here for hours finding example after example for you guys. And so it is, for busy people, this is great. And even for not busy people, just for people who have nothing to do, who are retired. I mean, if you don't want to sit in front of a screen intraday trading or short-term trading, you want to sit back and enjoy life and let your money work for you, then this system is a great way to do that, all right? So moving on, let's go to Westgold, another example, box after box after box, just stacking up. Okay, so just to show, for those people who like the US market, I'm just going to show a couple examples from the NASDAQ. So let's just quickly do that scan. Okay, so APPS, Digital Turbine, it's in, its seventh box, I think. It's just left that. It's just another great example of once a trend's in place, it can last a long, long time. Who knows how high this thing's going to go? If you're trading this from a trending Darvas Box perspective, you just trailed your stop loss up, and it's a pretty stress-free way to go about things. Okay, another little one that's just setting up at the moment, which I'm going to get if it breaks up. I didn't mean to press that, is Dropbox. I kind of like some of the fundamentals behind this company and what they're doing. I've done I'm not going to start talking about the fundamentals right now, but it's in its first Darvas box. It's got some big volumes on up days, rising on bounce volume. It's a pretty new IPO. It only IPO'd back here. So I think there's a lot of upside potential. I think the risk reward on this stock is very good. I think a stop loss down here, and from a trend trading longer term perspective, I think that if I risk this amount here, I think there's a good chance that this thing's going to end up at way higher, and that my reward to risk ratio is really, really in my favor. I think if I take, there's 100 trades like that come along, I think I'm going to win 50-60% of the time. And on those times, I'm going to make so much more than I'm going to lose. And so this is the sort of thing that I'm looking for, and I'm certainly keen on that. Now, moving on, I'm just going to show you. So that's really all the Darvas boxes that I was going to show you. I could just keep showing you them all day long, but I think that probably is enough to get the point across. I do those scans on daily charts, but also remember the weekly chart Darvas box scan is great. I'll do that another week on how to find these setups, and I do that regularly. So I'm just going to run through a tiny little watch list on some stocks that I'm looking at the moment on the Aussie market. And so, a lot of the gold stocks are setting up. They're in Darvas boxes. This guy's in a Darvas box, and I'm just watching this chop around and hopefully tighten and then break up out of that box. So we'll see if that happens. This is another gold stock. There's a lot of gold stocks setting up, and so this guy's setting up in a box. You can't trade all these because they're so correlated. You need to just choose one, and there's many ways to try and get that down. You can, fundamentals, or you can analyze a chart till the cows come home, or you try and get it down to pick your favorite one, and it's a bit of a coin flip sometimes, but when you see a bunch of stocks in the same sector setting up in Darvas boxes, it's certainly interesting and something to take note of. BCI, I'm still watching. I think we mentioned that the other week. It's just basing away, so we'll see what happens. Crop Logic, I'm in this thing. I think a lot of people probably got this the other day, bought it yesterday, so it had a good breakout yesterday. And the question needs to come up also, how do you buy things? Do you buy it right when it's breaking through this line? Do you have an order into the market, a buy stop order, for example, to just buy this thing at 5.8 or 5.9, or you're waiting for the close, right? And so my own way of doing it is for short aggressive term trading, I just buy the thing, right? If it goes through the resistance line, I'm just getting it. And because the really good trades, everyone's so desperate to buy it that sometimes the fills are bad enough the way it is. And if you wait till it's closed, I mean, there's some examples like where it would just be up. Yeah, it's up 15, 20% already. And so I'm willing to take the risk that if it's a bad breakout, I'm just going to bail. If it's a good breakout, then I was one of the first ones to buy it, hopefully. So I buy it with a buy stop order, and I have a limit on that, right? So my instructions here were to buy at 5.8 cents with a limit at 5.9 cents. So I don't really want to pay all the way up here for this thing. You know, if this gapped up, my buy stop is not going to get filled up there. It's only going to get filled if at the prices I want it to get filled. Okay, and you need to not be too cheap with that, because I've missed a lot of trades over the years by having a buy stop and having a really tight limit on that buy stop, and and then it just racing through. The best trades have really bad fills because there's no one that wants to sell, right? And there's all these people that want to buy. It's just supply demand, and so generally speaking, don't be scared of a bad fill. However, there's a limit to that. If something gaps up 10%, you don't really want to get filled on the high, because sometimes they will just crash all day and close on the low. So, but if there's a slow moving stock that you're buying in, like your super fund or something, then you can totally wait to buy this thing on a close above its resistance line. If you're managing your own self-managed super fund, and you've seen this Darvas Box develop on Telstra, and you think to yourself, I want to buy this thing and hopefully hold it for 3 years. I mean, what does it matter if you wait for the close or you just buy it as it's breaking through? I guess waiting for the close gives you a bit more certainty that it's a real breakout, but then again, sometimes it will break up and close above it and then just come back down the next day. So I don't honestly, it's not something I really think about anymore. Like, when do I buy it? I just buy it when it breaks above the resistance, because I've studied that resistance line, and I think to myself, look, if it gets above that, there should be enough momentum to have a decent move. And and I'm just not scared to sell, right? Like, if something goes up and falters, and I'll just get out. But with this guy, it's obviously, you need to figure out how you want to buy things, whether you just want to have an order in place to just buy it, or if you want to wait for a close above the resistance line. That's fine. You just need to be willing to pay a bit more. As I think you just need to be consistent. For the slow moving stocks, you just be consistent. For the fast moving stocks, I think you always need to buy when it breaks that resistance line. But I guess the decisions need to be made only for the slow moving stocks, because it's neither here nor there with those ones. Time is on your side, whereas those tiny little spec stocks, time is very much not on your side. Okay, so moving on, I got distracted. This guy's still basing, certainly looking like a nice basis for me. Let's just flick to the weekly. Yeah, very risky stock that. Hold on to your hats if you're going to trade that thing. This is just one I found, MQR. It's breaking my 200-day moving average rule. However, if this bases and just keeps carving out this awesome base and gives a few really, really low volume days, then it could be pretty nice. Northern Star, this is a leading gold stock. This thing's been going up for a while. I may have mentioned this earlier today. I apologize for that, so I'm just going to quickly move on. Pen, I mentioned last week. It's still based in here. Well, let's just have a look at a weekly. Looks nice. It's just basing. Patience with that. Silver Lake had a big move. I think we talked about this the other week. Usually these lead-in breakout stocks will not just have the one move. They'll usually have a bunch. So I'm watching this guy carefully. It's in the Darvas box. I'm just going to be patient and see if that wants to break out of that. I found this the other day, SO4, it's setting up, and this needs to consolidate more, but that could be, that's certainly one to watch. So there are a few that I'm watching. Okay, now just wanted to leave you with a chart of the week. Now, this is a pretty illiquid stock on the NASDAQ, and the only reason I wanted to bring this up is I'm putting this on a monthly chart, okay? A monthly chart, right? Not a daily or weekly, but a monthly. And so we all get so obsessed with the smaller time frames, but I like to analyze the longer term, especially for trend trading, but even for shorter term trading, you can get some explosive setups in the longer term charts. And this guy, they a property group in China, and so they've been in a big downtrend here. They formed this kind of, I just drew this kind of saucer channel thing that it was breaking out of, just me stuffing around there. And then on a monthly chart, it's formed 1, 2, 3 tight months, and then it's breaking up above that. So, don't get obsessed about the daily. Have a look at monthly charts. They really give you a really nice, clean picture. Let's just have a quick look at Amazon on a monthly chart. And just, it looks so smooth, right? All these little pullbacks, you tend not to care about it too much, and it just goes up. So, longer-term time frames definitely make charts clearer, and I think it's a good thing to look at on a consistent basis. Okay, so that's all for this week, guys. I hope that was useful, and I'll catch you next week. Bye.